And welcome back, students who are taking financial accounting. We're working on the Chapter 2 problems, the Group B that were assigned in this digital study guide, and we're working on problem 2-41B. And obviously it's going to take more than one video in order to be able to do it. And as always, if you don't understand something, pause and rewind the video. Watch it again. Since we're moving into more advanced concepts and things, if you don't understand the underlying concepts, go back to the theory videos, and in order to be able to pick up the concepts, meaning things like, as an example, I'm going to be spending less time explaining, the normal balance of an asset, okay, that type of thing. If you had watched problem 2-40, you had seen where you were making journal entries and then you were creating a trial balance. Well, here in this problem, we're actually being given our accounts and the balances in the accounts. And as you can see, it says prepare a trial balance, income statement, statement of retained earnings, and a balance sheet, for this problem, okay? So what does that mean? That means, we're progressing. We're moving a step further down the road of the things that you should be able to do, and it's assuming that you already know how to do the previous stuff. So if you're not getting something, go back and watch the theory videos again to get a refresher, or telephone and speak with an instructor, because with accounting, everything builds one upon the other, and if you're missing something, then you're already dead in the water when you continue to move on, because you're just not working with correct information as the problems get more and more expansive, right? So it says here, requirements: prepare the company's trial balance at December 31st, listing accounts in the proper order, list the largest expense first, the second largest expense next, and so on. And number 2 is prepare the year-end financial statements, okay? The retained earnings balance of 12,320 at the beginning balance of the year has not been updated to the current year's income or loss. And 3, was it a profitable year for Baker? Right. So what they're doing is they're saying, okay, here's our accounts, all right, and these are the balances in those accounts. So we're going to need to create a trial balance. Now, when I go to do this, you can look at the solution in order to see the exact correct formatting. Remember, formatting is important. In the classroom, you'll just lose points for incorrect formatting. But if you're in the real world and you don't have the correct formatting, you open yourself up to legal liabilities. But I don't have time to be making this perfect. Okay, and remember, lines on the paper don't matter. What does matter is alignments, capitalization, spelling, indentations, dollar signs, blah, 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 okay? The underlines, double underlines, those kinds of things. So as I create my trial balance, I'm going to be taking shortcuts, as if I'm a student, knowing that I'm the only one going to be looking at this information, but realizing that if I was going to do it professionally, I would, write out the words and so on and so forth, okay? So that's number 1, is in preparing the trial balance. Number 2, you're going to prepare the financial statements, but here's the thing. If you went back to problem 40, we did, and I had mentioned that there was no retained earnings account in the ledger accounts. Okay, well, for this problem, we do have a retained earnings account, and we use the retained earnings account in order to close out our revenues and expense accounts. Okay, now we haven't gotten to revenues and expenses just yet, closing them out. That will be covered in the next chapter, chapter 3. But for right now, the first thing that you do when you create financial statements is, 1, you create the income statement. And when you create the income statement, you have a profit or loss. You use that profit or loss to create your statement. To create your statement of retained earnings. Okay, so you need that in order to create that. And when you create your statement of retained earnings, you end up with an ending retained earnings, which you can use to create your balance sheet. Okay, so that's what they're doing here, and of course they're asking, if this is profitable or not. Right? So, and as I'm erasing this, just remember, pause anytime you need to, and copy down whatever you need to, because I'm just gonna move on and erase as I need. Right? So the first thing we need to do is create the trial balance. So this was for Baker Consulting Inc. And this is the trial balance. And the date is December 31st, 2014. Of course, this is center aligned, and writing out the date is important. It's not, you don't write for the period ending, for the month ending, for the quarter ending. You just put the date because it's as of that particular date that you're showing the balances in the ledger accounts. Remember, the trial balance is nothing more than a listing of the ledger accounts and the balances in the accounts. And the date you choose will change the balances in those accounts. My trial balances aren't necessarily created only at the end of the accounting period. They can be, you can run one as of December 7th if you wanted to. Okay. You might do that if you want to know what your cash balance is in the ledger accounts, that type of thing, or what your accounts payable is, or your receivables is. Okay. So the date is an important thing, especially in the computer system. You're going to input the date, and it's going to, if you put December 8th, right, it's going to leave out all the data. That's all of the journal entries in there all the way up to the 31st. Okay, those journal entries are not going to be included in those balances. Right, so column-wise, remember you can have the account number, and normally I would put the account number, but the solution doesn't, we don't have account numbers, so in our accounts here, next to our accounts, so we're not going to be using an account number column, but generally you do have account numbers, and you want to include it, and that just include it on your trial balance, and that just saves you the trouble of always going back to your chart of accounts to look things up because it's already there. So then you're going to have your accounts, and of course you're going to have a debit column and a credit column. Okay, and sometimes it'll be written your balance here, showing that that's a separation right there, right? But generally I don't write balance because it's a trial balance. You already know their balances. All right, so now you're going to list your accounts, and of course, listing your accounts. Notice the process just occurred to me. If you were looking at chapter 1 or in the first videos for this chapter, I had explained about the process of creating your financial statements, how I do things in a sort of a step-by-step format. Okay. The first thing being I would create my header, then I put in my descriptions, and now I'm going to put in my accounts. And my accounts are listed in the order of assets, liabilities, equity, then revenues, and then expenses. Okay, so I'm not going to be bouncing back and forth from this screen to this screen. Okay, you have that in your book, all right? So you can follow along from there. So our first accounts that we're going to list are our asset accounts. We start out with cash. Okay, and when you're creating your chart of accounts, when it comes to assets and liabilities, you list them in the order of what's called liquidity. In other words, how to convert things quickly to cash, how quickly you can convert your assets to cash, or how quickly you can pay off your liabilities with cash. So cash is the most liquid asset because it's already cash. You can't convert it, all right? But then next would be our accounts receivable. Okay, why? Because even though they're owed to you in 30 days, you can call up and say, hey, I need the money today, and they'll send it to you. So it's kind of a the next most liquid thing. We're going to have supplies, and supplies is inventory, and it takes longer to sell your inventory. Okay, so it generally takes longer to sell inventory than it does to collect cash for accounts receivable. So you can see how we're going from very liquid here to less liquid, especially since the next one here is building. Okay, now it takes a long time to sell a building, and it takes even longer to sell land. Okay, so you can see how we're going from most liquid to least liquid. Okay, and conversion of cash, and that's how we list our assets. And the same thing with our liabilities. How quickly can we pay off accounts payable versus how quickly would we have to pay off a note payable. Okay. Now for equity, generally they're listed at this point in time in your education, common stock would be listed first. Okay, and then retained earnings and a dividends account. Okay. This, as you progress, if you're an accountant and you move into intermediate accounting, you'll deal with things like preferred stock, bonds, things like this. So your equity is, equity section would change, but at this point in time in financial accounting, really so far we're only dealing with common stock, retained earnings, and dividends, because we're looking at this from a 40,000 foot view. Okay. So this is our assets, liabilities, and equity. But notice we still have revenues and expenses. And I'm not going to be able to fit it all on this one slide. All right. So what ends up happening is if I have to use another slide, okay, you have to head it the same. You have to put a heading also on this. So I'm going to repeat this. And I realize that this is not in the book because it's not in the solution, because everything fits on one page for the solution. But if for some reason, and because this generally is not covered in the textbook, there are times where financial statements have to cover more than one page. And if it does cover more than one page, and now remember, I'm bringing something more experience, more real world to the your education here. If you have to go more than one page, you have to include a heading on the second page, and your descriptions, your account, debit and credit, and you also have to number the pages. So you're going to put page, like this is 1 of 2, sorry, this is 2 of 2, and then you would have to label the page up here, page 1 of 2. Okay, and this lets everybody know that you have 2 pages. You don't just start a trial balance with no pages on here and calling this service revenue, and now we're going to list our expenses. Well, somebody's going to look and say, well, okay, what happens if you drop the pages and you don't have the page numbers on, and somebody picks it up and is just looking at this? It's incomplete. Generally, you're going to know it's incomplete, but there might be some question in the person's mind, and you really shouldn't have questions in a person's mind. If they read and understand the financial statements, then they're looking for certain things. Because we're using common knowledge, standards that everybody conforms to. All right. So, just be aware that, this is what happens when, you have to create a second page. Okay. So we dealt with revenues. Now when it comes to expenses, yes, with expenses, just like the instructions said, you list your generally your largest expenses first. Okay, and you go down the line. Now when you're creating your, and I'm just going to write over here as an example, and I'm going to erase this. you know, when we're assigning our account numbers, you know, expenses all begin with the number 5, okay? And you don't just start out by going 500, 501, 502, so on and so forth. What you do is you space them accordingly. You give them space so that as things, if you need additional expenses, you can insert them. All right, so your first expense might start out at 510, and then your next one might be, say, 520, and then 530. So this way, if 510 is salaries and 520 happens to be rent, and then 530 happens to be utilities, okay? If we went and let's say we had advertising, okay, my advertising expense is going to be larger than my utilities. Well, I can stick in number 525 and stick advertising in between, and it makes sense because I'm still starting out with my largest up here, going down to my smallest, okay? It would not make sense to, you know, have accounts all the way down to like 570, and then 580 you put your advertising in. You know, you know, you want a same set of standards, same uniformity. So space your numbers out so that you can, if you need additional accounts, you can insert them into the proper place. Okay. So salary expense, and write this stuff out, of course. Rent expense, and you do write out the word expense, by the way. Utilities expense, and then we had supplies and insurance expense. And insurance expense. And just as an FYI, you know, oftentimes you'll also see like a miscellaneous expense. And if you have a miscellaneous expense account, you're only using that account only if you can't find a place to put it in any of the other expense accounts. Okay, and what will happen is the account, you know, this miscellaneous expense should have a very, very small amount in it. The account, if you're not sure where to stick something and you put it in miscellaneous expense, the accountant will come along and look at those transactions and then what's called reclassify. In other words, make a journal entry to move it out of interest expense and put it somewhere else. Like, for example, you don't have advertising expense here on this trial balance. And let's say all of a sudden we decide to do advertising and you as a bookkeeper don't know where to put it. Well, you would probably put advertising expense into miscellaneous expense, and then the accountant would actually make a journal entry to move it out of miscellaneous expense and create, you know, the advertising expense account. Okay. And add that to your chart of accounts and make it a new general ledger account. But you generally do not do that on your own. Okay. If you're ever, you know, working with a set of books, you work with what is there in your ledger accounts. You don't add just because you can add. All right. If you just add, then what ends up happening is you know, if for one journal entry, it's on your books for the rest of your, you know, the rest of your life in the business. Okay. All because of one journal entry. So you don't just willy-nilly create additional accounts. I see in you know, some projects where the students will, you know, they have to make they purchase supplies, and there is no asset account called supplies, but yet they create a supplies expense account. I'm sorry, a supplies asset account. But they have a supplies expense account, but for whatever reason they just decide to create an asset account. You don't just add accounts, okay? You only use what's there, okay? So then we have total, and of course when we total, we're going to have our underlines, double underlines, underlining meaning the math, double underlines meaning that's the end of a calculation, and we use the dollar signs for the you know, showing that it's dollars and not decimals. Okay, so let's see, from the data here, now we have to put in from the data here, now we have to put in the balances. Okay, so the first number in the column being cash, it starts out with a dollar sign, and that ends up being 9,120. Now I know that the solutions doesn't show that. Okay, it doesn't show this dollar sign, but getting that practice of doing it. Okay, supplies was 650, building was 135,000. Use commas, 82,000 for the land. And my accounts payable is in the credit column, so it's the first number there. So I put the $4,100, put the dollar sign, and the 4,100. For the note payable, I have 85,000. For common stock, I have 120,000. For the retained earnings, I have 12,320. For dividends, I have 15,000. That's a debit. For the revenues, I have dollar sign 101.7. For the salary expense, I have 48,750. 11,340. Utility expense is 6,750. And supplies expense 1,840. And for insurance expense 5,300. Now I'm going to add up all of my debits, and that will give me a total debit amount of 323,120. Now be forewarned, don't just quickly come over here and say this is what my debit is, so let me write in my credit here. Okay, you don't do that. Do the math, add up the numbers in your debit column. Assuming that you're doing the math right, if your credit ends up being wrong, all right, then your debits don't equal your credits, and you have to go back and find your error. If all you do is just write in the 323,120, then what you're doing is you're fudging your books, okay? Because you don't know if there's an error or not in your books, and all you're doing is just quote unquote copying it to say it's right, okay? And that's the wrong way of thinking about this, okay? You actually have to go down and do the math, but make sure that when you're doing the math, you're doing the math right. And when I say doing the math, I mean, add up the column of numbers 3 times. And if you get the same 323,120 all 3 times, then you're relatively sure that that's the correct number. Don't use a handheld calculator. Use a printer calculator or an Excel spreadsheet. And the reason why I say that, because if you're using like an Excel spreadsheet, you can, in 3 different columns, put all of the numbers and add them up. Hit the sum and it'll sum up that column. But if you happen to get one of the sums is not the same as the others, then you can actually look at your numbers and see what's right and what's wrong. You can find whether you've done the math right or wrong, whether you've input the right number or not. If you've input all of the right numbers, then they should all come out the same, okay? And that's what you would use, and then you do the same thing for the credit column, all right? But if for some reason you have the wrong number, go back and find where you made your mistake. It's all technical. This is all just mechanical stuff. There's no, it takes concentration and focus, but it's no-brainer work as far as I'm concerned, because you're not, I could train a monkey to do that, and because they're not having to make decisions, all right? All they're doing is just copying information, all right? And they're putting it in the right place, and they're hitting it into the Excel spreadsheet or the printer calculator the right way. And don't misunderstand me. I said I could teach a monkey to do this. Well, yeah, I'm a monkey, okay? Because why? I make mistakes too, okay? And I have to be able to find my mistakes, but I don't have to I don't have to be making decisions, okay? I'm only just transferring information, rewriting it, adding it up. And that's something that everybody could do. But the the checks and balances in the system is that, yeah, you have to add up the numbers and add them up more than one time, okay? And you have to add up the debits, and then you have to add up the credits. You can't just automatically assume that, you know, this 323 is your credit, or vice versa, okay? All right, so with all that said, you know, this is the trial balance, okay? And in the next video, we will then pick up with creating our financial statements.